Here we go. Hey everyone, this is Jeff, LA Fintech. Just kind of wanted to go over this week in crypto land. Fintech and crypto wars, pretty exciting week actually. A lot of volatility, things like that within all the crypto coins. Some of the most recent news, FTC basically looking at some of the Ponzi schemes that are going on. That's I think going to be quite interesting with the FTC getting involved with. I think it's a Better Business Bureau, or one of the business bureaus is looking into that. Also, Google is following Facebook's with banning some of the ICOs and cryptocurrency digital ads. That's going to completely affect Google's revenues. I know some of the clicks when you're doing some of the financial side, it could be upwards from $20 plus, some say even $100. So I'm sure Google was probably having some issues. Rumor has it with the FBI maybe, but we'll find out, I'm sure, in the future. But it's kind of good that they're looking after their digital marketplace for ads, with fraudsters coming in trying to get innocent victims with potentially Ponzi schemes. Also, another thing that came out this week was the SEC is looking at some of the hedge funds that are into the crypto side. This is going to be actually quite big because a lot of these hedge funds aren't really set up properly. So some of the policy and procedures and compliance side isn't necessarily up to par with either state regulation or SEC regulation. It really depends what size fund it is, if it's less than 150 million or above 150. So I think they're going to be looking at valuations, how some of these funds are looking at valuations of some of these digital assets, crypto assets. Also, another issue I think they're looking at is keeping the client's assets safe, and within the crypto world, that is a big problem. We continually see hacks that happen with some of these exchanges. So I think that's good that they're looking into this of how these hedge funds are keeping some of these assets safe for their clients. Also, custodianship. How are these assets being custodian? What's the transparency with execution? Commissions with the executions. I'm sure they're going to start looking at that. What are the fees being paid with exchanges or not? How does the client pay for that? So that this is all just this week pretty much. But I would say the biggest news to hit this week came from the SEC on a transaction fee pilot for NMS stocks. This is actually way bigger than anything this year and last year maybe. Potentially the effects of this is huge. Hold on a second. Let me okay. Yeah, so the SEC with this new pilot program, basically they want to cap out make take rates from 0015 to 0005. This is probably something I would say in the realm as big as Reg NMS that came out in 2005. The ramifications of this were felt years later and to this day. But this transaction fee pilot program basically kind of puts restrictions on exchanges such as New York Stock Exchange or NASDAQ and all the various different dark pools and other markets that are out there. Basically anything trading NMS stocks, which basically includes everything that's trading on NASDAQ, New York Stock Exchange, Archipelago, and some of the regional exchanges. It's actually gonna be it's gonna affect them big on how they're what type of revenue they're doing. They're actually potentially could make even less money now. So the SEC is putting restrictions on them now on what they can charge. This is so big because of this one act, and they say it's going to be going on for 2 years, and sunsetting a year. It's going to be too late by then, basically, because these markets are changing that rapidly right now, and basically these players that are involved can and probably will be moving how they do business. And I'm talking about, this is actually super beneficial to crypto markets, and also the DEXs, which are the decentralized exchanges that are popping up right now, with atomic swaps. And hold on, there you go. So this is actually the news that came out from the SEC on the 14th regarding the transaction fee pilot. It's actually 2 test groups, one at 0015, another 0005, and then there's another test 3. But if you see right here, okay, some of these exchanges are positioned really good for this outcome of whatever's going to happen in 2 years with the NMS markets. And I would say this is actually going to bring the crypto world even faster to the institutions much quicker than I was even expecting. But we'll look at some of these companies that are involved in this. So this is chain.com. It's a crypto ledger platform designed primarily for the financial side. But these are some of the investors right here. And as you can see, we got Citi Ventures, NASDAQ, Fiserv, which is primarily like back office type of systems. Who else was in there? Let's see. Yeah, those are the major players backing chain. But these guys are ready. Citi, NASDAQ, they're already in here. This is great for them. They could actually be moving quite quickly within a year or two on building up systems that are designed for crypto assets. Here's another one, Digital Assets, which is run by Blythe Masters. So Australian Stock Exchange right here. JP Morgan, Dutch Boards, Australia again right here. CME right here. DTC, Goldman, and we saw that last week with the Polonix buyout, or from the division from Circle. Citigroup, BNP, last but least, ABN AMRO, and that's Digital Assets. So as you can see, some of these players are already thinking ahead. R3 right here, you got Barclays, Wells Fargo, Royal Bank, Daiwa, Natixis, Nomura, TD, BNY. Who else? Dutch Bank, Citigroup, B of A, HSBC, BNP, Royal Bank, UBS, Credit Suisse, Northern Trust. So that's R3. And then, as we saw last week, the New York Stock Exchange and Coinbase already. Actually, I had a mistake last week on mentioning, I think it was USAA. It was actually TIA Cref that was the monster, really. But they're not invested in this company. But yeah, Coinbase is going to be interesting with Coinbase because they have such a huge marketplace. And then here you got the Polonix with the Circle buyout right here. There you go. Some of the investors of Circle. There's the Goldman. Baidu. So yeah, this is huge what just happened with the SEC and the transaction fee. And past results that we've seen from the SEC, they do make mistakes, as we saw with Reg NMS. That was complete debacle. So we're going to see in this new market that's developing right now. This is huge for the new markets, which this is a whole new area for the crypto assets. Think bigger than anything you ever thought of. This is way bigger. But thanks a lot for joining, everyone. Give me a retweet, a thumbs up, follow. We're going to have an LA Fintech next Thursday. If you're out in the LA area, come by. Should be cool. Meet other people, like-minded individuals in the financial tech space. It's Jeff from LA Fintech. Thanks a lot.